Hi guys, let's do a Monday recap, and this time I was trading live again after being back from a work weekend away from my computer, and let's get to it. So my first trade was in SYF, and you can see the stock was gapping up, so my original idea was long, but then comparing the SYF at the bottom and SPY, the market itself, at the top, you can see that after the initial push higher in SYF up to about slightly above 18, the market then continued slightly higher, but SYF started to go lower, and seeing as it created a really nice breakdown formation, I decided to jump in. So I got in at 1774 at the break of those lows, and my stop loss was above 18, so I needed some 50 cents, give or take, so right around there, to the previous highs, which would act as support anyway. So the risk reward was okay, and I was feeling good. So it broke down a couple of cents and then consolidated. Seeing as the S&P started moving slightly higher and SYF still holding the sideways channel, I was pretty confident. Then it started breaking out, and I saw that the most likely scenario for the SPY would be upwards, so I exited the trade before my stop loss at 1791. So pretty happy with the result. Managed to save quite a bit, and I actually took a lower size for this trade, so I only lost about 0.42%. So moving on to the next trade, which was in ArcelorMittal, and this was a long over 930, seeing as this was a really nice cup and handle formation. So I took it right at 931, and this stock is usually not a huge mover, but from here and now it can move quite drastically. So seeing again on the daily as it jumped half a point from the previous highs, there was a reasonable expectation for it to go even higher. So I believe my target was somewhere close to 950. Again, quite reasonable for a day like this with the continued SPY support, but unfortunately it got stopped in the tracks right around the previous high, and wouldn't go much further. So I also exited before my original stop loss, and it was really close to break even, so I got out at 928, so just 3 cents stop loss. It was a great decision because my original stop loss was at 922, and as you can see it got to 921, so definitely saved a good money there. And lastly, this is the other side of the coin, where I entered PENN long over this consolidation and somewhat cup and handle formation as well. So my entry was 21.58 and my target was 22.39. But seeing this double top, I decided to exit with half of the shares right before 22, so 1 cent lower. I got my first profit target, and then I decided to move the stop loss under 21.60. So with counting in slippage, I would be at break even for the second half. So that happened, and it was actually in retrospect only a pullback, but again, seeing the market as the market reached previous swing high, it was likely it's gonna go down, and it did, but PENN proved to be strong and it would eventually reach my target. So it's a double-edged sword, but I tend to play it on the safer side, and in total I ended the day at break even with 3 trades. So tell me what you guys think of this approach. Are you more aggressive, less aggressive, and what works best for you? So thanks for watching, and have a great trading day today.